All right, welcome to the daily market recap for Thursday, October 2nd. In this video, we'll be taking a look at the action today from the indexes, the liquid leaders, industry ETFs, then end the video with long and short setups going into tomorrow, like we do with every daily recap. So if you guys enjoy the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Getting into the indexes, we'll start with the NASDAQ. Uh, Big gap up today, sold off, undercut the close of yesterday, so no unfilled gap to the upside. And then we did have a nice rally end of day to close at a new all-time high, up another 0.4%. There is potential that this is a hanging man candle, but we're only going to know that if we see confirmation to the downside with a gap down takeout of today's low. That would be the confirmation for a hanging man candle. Until then, I just see a little gap up, shake out in the morning, and strong close. We had really great action out of the leaders. So until we see confirmation lower, I'm not very worried. Similar structure out of the S&P 500, pulled into the 5-day moving average. A little bit more weakness here than the NASDAQ as tech continues to show strength. Up 0.1% for the day and a new all-time high. Next, we have the growth stocks of the Russell 2000. That's IWO. Higher highs, higher lows. Very nice, strong close back over the previous high on September 29th, right into kind of this cluster at the highs for the year. Nice little bounce of the 10-day moving average. Again, over the 20-day moving average is kind of my line in the sand for risk on or risk off. And this is above all the key moving averages. So until that changes, until we close below today's low, I think it's a risk on market. ARKK, another kind of sentiment or like risk on, risk off indicator that I use. Nice gap up, sold off a little bit in the morning, but closed right at the high of the day, up another 2.55%, already up 7.3% for the week. Just phenomenal action out of ARKK. And that again shows that we're in a risk on market. Another great sign of a risk on market is Bitcoin working well. And taking a look at the IBIT chart, we can see exactly that. This was showing relative weakness last week as we pulled back into the lows of the pullback from August, end of August. And instead of taking out those lows and accelerating to the 200-day moving average, we had a nice move on Monday, little consolidation Tuesday, gap up Wednesday, gap and go on Thursday. Now Bitcoin looks ready to take out its all-time highs, another risk on indicator. Now we'll take a look at the liquid leaders. First, we'll go just by price percent change. NVIS, some announcement with a Google partnership today, up another 8.9%, closing at the high of the day. Just phenomenal action. Had a big gap up. What was this? September 9th, up 49%. Did a secondary offering that got soaked up. So buyers stepped in above the 5-day moving average. Whenever you have a secondary get soaked up like that, that is a sign that the stock, as long as the market is healthy, is one that's going to continue higher. And that's exactly what we've seen out of NBIS. Probably, I mean, one of the strongest stocks in the market. LEU, a nuclear stock. OKLO had a great day today. LEU, another all-time high, another all-time closing high, up 5.3%, acting well. Robinhood with a new all-time high, up 4.8% with a little gap up over the 5-day moving average. Alibaba continues just this monster breakout of a 3.5-year base, just riding that 5-day EMA higher, even on pullbacks, only pulling back to the 5-day moving average. Incredibly strong. All of the Chinese equities look great. A little extended at this point, so some pullback, some consolidation would be fine for them, but the Chinese trade is not one that I want to take my eye off. KTOS, higher highs, higher lows, kind of a doji close on lower volume. So indecision candle there, but still up another 2.3%. Google up 0.3%, still kind of trading between the 20-day moving average and support gap lower and the resistance gap up top. If we can close above that, it looks like we could break out of this little bull flag into the 20-day, and that would be healthy. BE, nice consolidation day on lower volume than yesterday, over a rising 5-day moving average. Nothing wrong with that after the 4-day move that we've had off the 20-day, after like 2.5 days of weakness. Phenomenal strength there. APP, little pullback day, another one on lower volume, close under the 5-day moving average, And so far, this has been supported at the 10-day every time it consolidates. So keep an eye on that spot for tomorrow. The only real weakness in the market today was Tesla. Pre-market, they were gapping up like 3 or 4% after their delivery numbers came out. This turned out to be a sell the news event. I did trim some of my TSLL at 100% gain in pre-market, which was nice. I still hold about 15% position in that. So obviously, this wasn't the price action that I was hoping for, but that's why you trim some into the extension, into like a news event like we had today. I don't think it's over for Tesla. Like this is a bearish engulfing candle on a pickup in volume. Not ideal action, right? Obviously, I would have rather we gap up on the good news and then take out all-time highs, but we weren't able to do that. Spot that I would be watching for is the gap zone low at 417. As it comes into that, the 20-day moving average would be catching up, and that would be a spot to reload the boat for the Tesla position. Next, we'll go over some industry ETFs. One thing that I want to kind of go over is just the number of ETFs making new 52-week highs today. So, blockchain ETF, Chinese ETF, semiconductor, solar, communications, IYZ, metal and mining, cybersecurity, nuclear and uranium, gold mining, and aerospace and defense, all making new 52-week highs. Just incredible strength across the market. Market breadth is extremely, extremely strong at this point. But let's dig into some individual themes. First one is MSOS, the cannabis ETF, continues to consolidate with closes over the 5-day moving average. This looks ready to really get going. Um, Unfortunately for me, I was in Tilray. It looked great today. It was up about 15%, 12%, something like that in the morning, and then reversed closed still over the 5-day moving average. So nothing horribly wrong here, but really thought that was getting ready to go. MSOS looks incredible. Definitely a theme to kind of take note of. NLR, nuclear and uranium theme. Look at these volume bars, just massive accumulation all the way up, new all-time highs for this theme. Blockchain ETF. This is kind of like blockchain, so crypto related and kind of like AI database. Definitely two themes that you would want to be in. Makes sense that it's making new all-time highs. Solar stocks, big gap up today. Nice close up another 2.5%. This has been one of the hottest themes off the low in April, even though I think people are just starting to talk about solar stocks. It really bottomed after the bad news that the solar tax credits were getting taken out in the big bill. And we got a gap down on that news, but we didn't follow through to the downside. We just put in a higher low. When you put in a higher low on bad news, after a 3.5 year like sell off, basically. I mean, look at EAN, just 3.5 years completely to the downside. Now this theme is going to have a lot of power in the next couple of years to come. So definitely one to keep an eye on. XME, metal and mining, just frozen rope over the 5-day moving average, extremely strong. Semiconductors, big gap up and then consolidation for the rest of the day, up 1.4%. IoTech ETF, beautiful, beautiful action after this 10-day EMA test. Another new high for the year, not quite a 52-week high, but just great, great action here. And then still like the one warning sign that I'm seeing is XLF, the financial ETF. Nice bounce at the 50-day moving average. Still closed red on the day while the rest of the market was extremely strong. Definitely want to hold today's low, at least on a closing basis. Otherwise, this is a warning sign for the market. Before I get into the long setups, the long and short setups, we did get an updated number for the NAAIM active investors exposure levels. And you would expect with a very strong market, all the risk on names going higher, you would expect exposure to be cranking over 100%, at least over the 95% threshold that I kind of use as like a little warning sign that the market's overheating. And instead of being at that overheated, overbought level, we went from 86% long to 80%. Active investors' exposure level actually dropped while we're getting this incredible price action. That gives us the recipe for kind of a FOMO, pure momentum, pure speculation blow off top for the rest of the market. And then after that, that blow off top, after that accelerated move ends and we break to the downside, time to take a nice long vacation because we're going to need a extended correction to consolidate after all the gains that we've had. But until that happens, this is the type of market that you want to be playing aggressive to the long side, not buy and then just hold forever. Buy, place your stop, make sure you're managing risk. But this is the type of market that you can make a lot of money on the long side if you're in the leading stocks, the leading themes with higher ADR, higher liquidity. Getting into the long setups, we'll go most liquid to least liquid. First one is APP. Kind of covered this already, but just looking at the 10-day moving average and support gap, undercut and reclaim as the entry. The stop, I would keep a 2 or 3% stop on that, just in case this is a little too extended. We're getting kind of a rounded top. But a pullback to a key moving average with a support gap zone, kind of a breakout retest, is a spot to watch. CRWV, this had a nice gap up on Tuesday. Since then, we've just consolidated here. I don't want to take this on strength because we're in a resistance gap right here. What I would be looking for is an undercut of yesterday's low, the 5-day moving average, and then a reclaim of that area. So what was the low there? 132.27. Reclaim that low, and then my stop would be at the 10-day moving average for CRWV. OPEN, open door, just beautiful consolidation here. Tested the 20-day, bounced, higher low tested the 20-day. Very, very light volume. We're in a momentum market. This is a stock that's made a move from 50 cents to $10 and has consolidated well since then. If this breaks to the downside, that is a sign that, hey, maybe market momentum is drying up. Maybe things are already too extended. And we do get that hanging man candle on the NASDAQ and the S&P 500. Perfectly fine. Use this either way. You don't have to trade it, but use it as market feedback. If we break to the upside, momentum's still on. If we break to the downside, first sign that momentum is drying up. SoFi, this was buyable today on the undercut and reclaim the support gap. I didn't take it. So just keeping an eye out for another test of that area. Kind of with that XLF financial ETF being weak, I think it's something that I want to buy on a shakeout versus on strength. Sure, you could take it through today's high, stop at today's low. That would be a fine trade. You would have you would have your risk managed. But I'll be watching for an undercut there. IMS makes it back on my radar. Stocks that just like can't break down. Those are the stocks that once they get to a spot that makes sense, I definitely want to try, especially in a market like this. Like HIMS is not a meme stock, but definitely has that like FOMO type energy to it. Zooming out, supported at the 200-day, supported at the 200-day, supported at the 200-day. And the most recent support of the 200-day was on an island gap down. So we gapped down, tested the 200-day, then gapped right out of that. So anyone who like tried to short this, like as it was coming into the 200-day, got their face ripped off. And then just higher highs, higher lows, higher highs, higher lows, higher highs, pulling back into the 10-day. And then nice move today, but a little bit weaker closing range. Looking for an undercut and reclaim of the 10-day moving average in the gap zone as the entry. Stop would be yesterday's low on that. And I apologize if I'm talking too fast. I'm filming this during Cubs game, the game 3 of the Cubs. So if they're doing well right now, I hope that continues. RMBS, nice little consolidation. Gap down on September 25th. That got bought up back through the 10-day moving average. Perfect consolidation. Another higher low test of the 10-day. We do have this support gap here at 102.60-ish area. Either an undercut and reclaim is viable there. Stop would be yesterday's low in the 10-day, or a breakthrough today's high, in which case just under the support gap would be my stop. SEDG, we talked about the solar stocks continuing to rip higher. This one, just looking for a pullback in that 10-day support gap undercut. Very low volume on today's consolidation. That's what you want to see. You could take it on strength as well. I think solars are just a little extended here. So instead of trying to take it on strength, a little bit of a shakeout would be better. Speaking of better, this is an insane market. This is the only type of market that I would try to trade some of these types of names, but BETTR, big move from $13 up to $92. Since then, pulled back into the 5-day, closed under it once, and then gapped up right from that area. I haven't drawn the gaps on this one yet, but really nice like support at that support gap area. Just to break through today's high is the entry. Stop at whatever the day's low is because I want to play this just for a momentum burst. I don't want to buy it, let it just like meander sideways and then stop me out later. I want instant traction on something that's going to be a performance boosting trade. AMCS, another semiconductor stock, just pulling into the 20-day moving average in the support gap. Nice little downtrend here. Very similar to RMBS. You could take it on the support gap undercut like we did today, or on strength through today's high. Then your stop would be the low of today. PARR, I forgot to go over this in the ETFs list, but XLE looked like it was kind of showing some relative strength. We rallied up into a resistance gap for 4 or 5 really nice days off the 50-day moving average. But because the 200-day is still declining or going flat, you have to expect a lot of volatility in this name. Any name that has the 200-day going flat, you want to expect a lot of volatility and buy on weakness and on shakeouts versus on strength. And now, if this has like one more day to the downside, we can get a higher low test of the 50-day moving average and a gap zone for the energy ETF. So on an individual stock basis, PARR, pulling into the 20-day moving average, we've got this gap zone just above the 50-day. So an undercut and reclaim of that 3340 area would be buyable versus the 50-day. And finally, CRNC on the long side, just looking for a pure momentum burst on this. A name that's gone from $2 up to $26 earlier December, and I think like the first 2 days of the year. Since then, has just gone sideways, very similar to the RGTI, the IONQ, the quantum names that had the crazy November, December, a little bit of January, went sideways for the rest of the year, and then started their breakout. Again, this is the type of market that these plays actually work to the upside. Getting into some short setups. Again, until momentum breaks down, I think it's better to trade on the long side than on the short side. But I do want to be prepared with some setups just in case we do see the market roll over here. First one is Amazon. We had a rally up to a resistance gap, followed by a gap down on September 10th. Lower high, loss of the 5, the 10, the 20, then the loss of the 50-day moving average. And as the market's been ripping higher, this is just going sideways on lower volume. No strength here. And if you take a look at like a bunch of the stocks that I keep saying like the average person spends money on, like food stocks, retail stocks, a lot of them are starting stage 4 downtrends. And it just shows like the average person like experiencing the economy, it's not a great economy for them. So with this, just looking for a rally, uppercut and fail of the 50-day moving average as the short spot. Keep the stop loss over the gap zone at 232. MSTR, I think this is a pretty low probability trade to short just because of how strong Bitcoin is and where we're at in the market. FOMO type market, positioning still relatively light. And I like this is how stocks bottom. You get an accelerated move to the downside, big volume, and then you follow it instantly by unfilled gap ups. And we've gotten a couple gap ups here, 1, 2, today, 3, into the 200-day moving average. So I have alerts at the top of this resistance gap where we failed September 18th as a potential short. I just think with Bitcoin being so strong and with this quick turnaround with the multiple gaps to the upside, I think it's probably one that kind of overshoots this gap a little bit before we start seeing some weakness. Costco, probably the most like the short setup that I'm most excited about. If we zoom out, we see the stage 2 uptrend, a stage 3 topping phase, very similar to SFM that had the stage 2 uptrend, stage 3 top, and then we've covered this multiple times on these videos, but just a pure stage 4 downtrend. This dropped from 165 down to 105. No bid in sight here for grocery store Sprouts. And now Costco looks like it's starting that stage 4 decline. We gap down on earnings, basically trade sideways while the indexes rallied higher. Closed today in the red, or basically flat on lower volume. Just looking for a break through today's low. Stop would be the high of, what was this? Wednesday? No, sorry, Tuesday, just above that gap zone as the stop loss. GEV, so many energy names have been ripping higher, and every chance this gets to show strength, it just immediately gets sold off. Today, we had a nice gap up, rally up to the 50-day moving average. Didn't quite get there, rejected at that resistance gap, fell through a secondary resistance gap, and then closed basically flat on the day. So a lot of weakness in here. Now, maybe this is just consolidating and it's the last name that gets going before like the market rolls over. But just a lot of relative weakness here. Would look for a lower high rally through today's, like through this gap zone at 615 as a potential entry. Stop would be over the HVC from earnings above the resistance gap and the 50-day moving average at 631. We talked about the strength of the quantum names. RGTI, just incredible strength here. Another gap up after testing the support gap and the 10-day moving average. IONQ came into the 20-day, undercut the previous day's low, then gapped up. Very strong action today, closing at the highs. And now we have QBT that's just significantly weaker. And if I'm trying to short like a theme that I think is extended, I don't want to short the strongest stock in the market. I want to short the weaker stocks within that theme. That's probably only going up for a sympathy play, and that would be QUBT. It had this nice move on September 19th, then did a secondary offering that looked like it was getting soaked up. Lots of strength on September 26th as we rallied back through that resistance gap. Immediately uppercut and failed there. I'll move the cursor so you can see. Uppercut and fail of that resistance gap. Fell through to the 20-day. We did bounce at the 20-day, did have a nice little gap up today, but a lot of volume for only 5%, which potential weakness there. Would look for an uppercut and fail of today's high as the short entry, and then the stop, I would just use like 2 or 3% risk on that one. Royal Caribbean, this has been on the short watch list for a while, made new all-time highs just for a day or two, followed by a resistance gap, loss of the 20-day, another gap down, a loss of the 50-day, then two attempts at the 50-day that got sold off, another resistance gap, just piling up kind of the warning signs as this trend rolls to the downside. Would want to see a rally up to the 20-day moving average at 329 as a potential short entry. Then the stop would be the high from, is that Monday? Yeah, Monday's high. MMYT, another stock that looks ready for its stage 4 downtrend. We have the stage 2 uptrend, the stage 3 top. Now the 200-day is in a downtrend, the 50 days in a downtrend. So you have the 200-day, the 50, the 20, the 10, the 5, all in the correct order for a like power downtrend. Today, nice little bounce into the 5-day. Want to see a little bit more of a bounce back into the 20-day moving average, right around 96.50 as the entry. Keep a stop over the 50-day moving average, probably around $98 there. And finally, QMCO, another quantum name. They actually make cassettes that made a big move from $6 up to $12, immediately reversed at this resistance gap, bounced at the 20-day, and is starting to trend a little bit higher. Want to just take this on an uppercut and fail of that resistance gap at 1190 as a potential entry. Then the stop would be, I would do the stop whatever the high of the day is as it comes back through that zone. I don't want to give it another, what would that be, 5%, 6% to the high here. If I have to take this trade twice, like this is one I have the highest conviction on because it's not even like an actual quantum name. They make cassettes, and one with just so much overhead supply here. That is going to be the daily market recap for Thursday, October 2nd. If you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Go Cubs and have a great rest of your night.